Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning back on the show this week is a favorite guest of our audience. That's David Morgan with themorganreport.com. David, welcome back to the show.
Colin, it's great to be back with you. Thanks.
And we've discussed putting together a little bit of a Christmas giveaway for our audience here. Thank you so much for helping us out with that. I'd ask all of our audience members to go to themorganreport.com/new report. And I'm going to ask David to tell us a little bit about that report. But on the back of that, we're also going to be giving away 5 free signed copies of David's book, The Silver Manifesto, which has been a huge hit in the silver community. David, tell us about the report.
Certainly. This is a new technology, and it's created by a company that we actually had in the past that was bought out by one of the majors. It was actually bought by First Majestic. And this gentleman brought me this idea quite some time ago, years ago, and said, I'm putting together this technology, and it's basically off the shelf. And I did, the one-handed salute, meaning I, hit myself with my forehead with the palm of my hand, go, wow, why didn't I think of that? This is just kind of obvious. Well, an idea is just an idea until it's implemented. So a few years down the road, we finally got to the location with the second really prototype and watched the whole thing from front end to back end, meaning material in the hopper and all the way to the gold processing. Now this works for gravity feed gold only, and it's nothing that's that special. It's just that no one has ever put this together before. One of the main things is that it can be rolled on to any place you can get to by road, and all the water is self-contained. And there's very little water loss, and so it's very environmentally friendly, and it bypasses a lot of permits. So I'll just read you a little bit of what we have to say about this. And again, to get the report, you just go to themorganreport.com/new report. That's themorganreport.com/new report. You'll get this report for free. All you need is your name and an email. And then out of that amount of people that come in for this report, what we will do is we will randomly select 5 people to get the Silver Manifesto written by myself and Chris Marchese. So back to what the report's about. There is a new technology created by an innovative mining service business that's about to be rolled out, and it could be, and I want to emphasize the word could be, a game changer for the small, undercapitalized miner. So it's not going to work. I mean, the technology would work for a mid-tier or top tier, but who's going to care? It's really the junior mining space where this is really relevant. David wants you to get advance notice about this before the masses, along with know about this little known investment opportunity. Again, speculation. So this would be, from our perspective, money you can afford to lose. Last thing, disclaimer, I own it personally, and I don't have to say this, but I will. The cost to me at this present time is about double what it is now. That's not why I'm pushing this. Again, I did what I teach, money I can afford to lose. It's just that there's been some restructuring of the company that in the long run will be far better for all investors, myself included. And that's sort of why the Delta Enterprise. So that's it. themorganreport.com/new report. Get the report, get a free book possibly. And back to you, Colin.
Okay, thank you for that, David. And let's start off with talking about kind of a wrap-up of 2015. The year certainly didn't shape up positively for gold and silver investors and the gold and silver equities. It was a rough year, but maybe, just maybe, we're shaping up for a good 2016. Let's leave predictions till the next question, but just give me a wrap-up of what you saw happen in 2015, the macros that played into kind of what happened with the metals, and also touch on the interest rate that we just had.
Great. Well, we had a disappointing year as far as I'm concerned for the metals, and that's another disappointing year among the last few. However, it is what it is. We started off the year or actually I should say this year, 2015. We started off the year kind of with a bang. We came out of the chute in the January with a pretty decent move in the precious metals markets, but it lasted a very short time. and then it was basically all over. The metals actually performed best the first half of the year, 2015, than they have the second half of the year, and that applies to gold as well. We basically, going back a couple of years, lost what I call the positive psychology of the market when silver broke the $26 level and gold broke the 1550 level at the same time and on extremely high volume. Definitely a takedown as far as I'm personally concerned. And by the way, we go through that in the Morgan report, we go through that in the Silver Manifesto, where a lot of people ask about the silver manipulation. I don't have time, Colin, to go through all the ins and outs, but if you're really interested in the silver manipulation, you owe it to yourself to buy the book. Because with that knowledge, you might have to read it 2 or 3 times, or just, Xerox, an old word, copy or scan that chapter. And you'd be armed with data-driven material that would definitely give you an advantage if you're on the manipulation side. We are, and we'll try to be as objective about that as we possibly can. Back on point, we got a pretty good rally in the gold markets, and just fell off. So it's just been, kind of a big disappointment when they broke the support levels in the April 2013 time frame. And here we are a couple years later, and it's just been, big sideways move from that drop down where silver actually was supported around the $19 level. I called the bottom at a spike low 1817, held that for 14 months, and then it broke below that level. And since then, we've really had a hard time to get back over 18. We've only done it once, and to get over 19 hasn't happened in quite some time, basically for the whole year. So gold, similar pattern. Gold, of course, is more widely held and considered more of an establishment investment than silver is. Certainly a similar pattern, but not percentage-wise the loss that we've seen in silver on a percentage basis. Technically, it looks like it could be bottoming here. Both gold and silver under the respective 200-day and 50-day moving averages. I don't know if I'd bottom fish in here, although personally I have added to a silver position in the physical realm recently once we were below the $14 level. And we are seeing volatility come in, Colin, and volatility to a market, meaning like we're down 50 cents one day and up 50 cents the next day, down 50 cents the next day and up 50 cents the next day. That kind of volatility is very common in a market that's about to turn direction. I'm not saying that it will or it is. It could be. Certainly volatility, even if it's going to trend sideways for a while, adds interest into a market because the day traders, the momentum traders, the high frequency traders, etc., all look for volatility in any market. They're sort of agnostic. They don't care. They don't have any fundamental thoughts about gold and silver being honest money or financial assets or safe havens or any of that stuff. They basically trade whatever's moving. So long-winded, that's where we were, and I think you wanted to ask where we're going. So I'll just segue into that. First of all, my favorite saying, or one of them, is no one knows more than the market. I think that we will see a better year in 2016, but I want to add the caveat that I just finished the Silver Summit late November 2015, and almost to a man, all of my peers and colleagues were of the opinion that we had another year in the precious metals markets to be what I'll call in these doldrums. No one gave specific prices, but they all were of the idea that we would be at low levels in the metals for another year. I have a different view. I think that we will do better this year coming up 2016, and depending on interest rates and primarily the equity market will give us impetus to see more moves into the precious metals or not. If we see the general equity market measured by the Dow or the S&P or both, and they start to falter, and you see some money coming out of that market, the normal place to go is several places, of course, these days, but gold is the most negatively correlated asset to the general equity market. So if you see a fall in equity prices, you can rest assured that some of that money is going to find its way into the gold market. And that's what I see happening. I think that, there's kind of two big names out there, different thoughts. You've got Martin Armstrong looking for, I don't know, 23,000 or something, a higher stock market, in other words. And you've got Harry Dent, I think, looking at like 5,000 or 6,000, so the opposite view. Am I in the middle? I'm more or less in the let the market tell us mode, but from all the technical indicators and sentiment and length of the market, I think I favor the downside more than the upside for the equity market, which again favors gold. Silver, gold on steroids, as Jim Sinclair has sort of monikered the silver market. Certainly it has much bigger moves up and down. I think that you're going to see silver do much better in 2016. Now, people want prices, and I think they deserve to hear, price levels. If you look back to what we just talked about, Colin, and say, well, David, silver really hasn't done much positively price-wise from about the $19 level, and it was taken down below the $19 level somewhere around August, September 2014. So if you take that into account, and charts are not always symmetrical, but I've been looking at these things for like 30 years. I've been, in the markets for 40 years. I didn't really catch on to the technical side till I had about 10 years in the market. And there is something to these charts. Even the manipulation shows up in the chart. I mean, what I just said about that big sell-off, it's there. You can see it. You can see the move. You can see the volume. Those are the two most important things when you look at a chart. So they can't be disguised. In fact, if I was in the courtroom, I would use the chart to show the courtroom and the jury. I'd prove my point with charts, or at least partially. Anyway, back on point. So what I'm going to tell you is what I believe, and it's going to take some backing and filling and some work to get back above the $16 level. And then when that's achieved, there's a lot of resistance between 16 and 17 in silver. So it'll take, if you look at this chart and say we're very bullish, it would take about half the time, which is about 6 months. So maybe 3 months to work through the 17. Then, of course, it has to hold that level and up to 18. Once you get into 19, on and on. So the overhead resistance is pretty significant. I don't look for huge moves in 2016, with the caveat that it could. And talking out of both sides of my mouth, I don't like to, but I need to. And that is express what can happen in markets. And that is that there's a huge equity sell-off, or there's some financial problem out there with a major bank or brokerage house or banking situation, or something happens in the foreign exchange markets, or more likely takes place in the debt markets, not only in the junk bond market, which is already getting a little bit fluttery. I'm not that concerned with it at this point in time. But if we see a large sell-off, let's say in the treasury market or something along those lines, then certainly you could see a rush into the precious metals. And there's no fever like gold fever, and there's no run like a gold run, except for a silver run. So I don't want to leave that out, because there is the possibility that all the technical stuff that I just said turns into be rather meaningless, because these markets are so small and things can change rapidly. I mean, think of that flock of birds with the lead bird, changing its mind or whatever it does, and takes a hard left and they all follow. That kind of herd instinct that takes place instantly does take place and can take place in the financial markets. Will that happen in 2016? The answer is I don't know. And my leaning is it will not. I see more of a grinding up for the precious metals. So long-winded answer. I'm not overly enthusiastic, but I am positive. I would really be shocked to see silver hold in the $15 range for a year or below, 14 to 15. I'd be absolutely shocked to see gold under $1,100 level for a year. That would shock me. I just don't see that.
Well, let's talk about probabilities, because after 4 years of a bad market, it would only make sense that we're probably bottoming out here. The chance for next year, as you said, is slightly positive, but you're armed with a lot of data-driven arguments, and there are always ways to make credible cases with objective observations. So what could cause silver to go below 14, maybe shoot down to 10 or 11, or gold to go below 1,000 next year? I mean, what from your historical analysis, is there any precedent to say that could happen?
Well, it could. I've already done another interview that was recent within the last couple of weeks, maybe 3. And I said you could see, gold hit the $1,000 level or below. First of all, just to review, all markets move on buying pressure or selling pressure. And since these are leveraged markets through the COMEX or through the CME, you have to understand how these markets work. Now, I know almost everyone that's on this program knows, but I just want to review because there's always new listeners. So when there is a bid-ask spread on a commodity, we'll just use gold as the example, but this applies across the board for the commodity market, is that someone's making an offer and someone is saying they'll accept it or not. So if there's buying pressure, what that means is a lot of people want to buy and not many people want to sell. So for the order to match, then the person that wants to sell, that's reluctant to sell, the price gets bid up. So for an example, you would have $1,200 goals and gold's moving up. Someone says, I don't want 1,200. I'll take 1,205, 1,205. So it goes up $5 more. Someone says, I'll buy it at that. The other person says, I'll sell it at that. And the market moves up. So continue that scenario. Goes the other way, obviously, on a sell. There's more selling pressure than buying pressure. Someone says, geez, I want to sell silver at 14, and someone else says, I want to buy it at 14, and these orders match. And then someone says, well, I don't really want to buy it at 14. I think I want to buy it at, $13.95. And the next offer is at the market, for example. So that'll be sold off at $13.95. But you have to use a little common sense. You have to ask yourself, well, who in their right mind would want to sell silver at $14 an ounce? Certainly someone that mines it, that's going to cost like 15, 16, doesn't want to sell it at that. Most people in the retail market would say, if I can buy it under the cost of the best mining companies in the world, I'd be a buyer, not a seller. And so, thought for the listening audience is, who is selling at these levels and why? But anyway, back to the point. So the overall pressure certainly could be more selling on paper to drive the price lower. So that selling pressure I outlined a moment ago takes place in a very thin market, which means there aren't many participants. And that's the case in these last 7 trading days as we're doing the show. And what we have seen in the past is that the lowest prints for the year have come on the last trading day of the year, which I think would be the 30th of December. And so could it? But you asked me in the beginning of the new year, and the answer, of course, is yes, it could take place at that time. Normally, they sell off. What I've witnessed the last several years, being the last 3-4 years, is a sell-off to the last trading day of the new year, and then you see some short covering of positions as soon as the new year starts. That's what I expect to happen, but could it happen the new year? Certainly. It basically depends on which way the paper paradigm is going to move the market. I know that people don't like to hear this, but it's the way markets move. Certainly it's the way the precious metals move, and particularly it's the way the silver market moves, because there's more paper per ounce in the silver side than any other commodity out there, at least to my knowledge. So it certainly has the most influence. But the physical market absolutely will have the most influence, and it's already exhibited that a couple of times. As we all know, from the 2008 crisis, silver was bid up in the retail market by about a 30% premium. And we just saw that recently when silver moved from roughly the level, a little higher than the level we are now, up to 16. I was hoping we were going to see more strength in that, but once this 4 to 8 week backlog took place at in the fall of this year, Once that was satisfied and the premiums went back to normal, we saw the market fall from the spike up past 16 all the way back down to where we are now, basically making some new lows.
David, one could argue that the gold stocks or the precious metal stocks are priced as if the underlying commodities were much lower than they actually are. And I guess that can be attributed to investor fear about where gold and silver might go in the coming months and years. I want to ask you, back in the 80s when gold blew off and hit its high of 800 something, the gold stocks actually continued to stay in a bull market for a good amount longer than after when the gold price peaked. And even looking back 4 years, the gold and silver price kind of peaked and started to come off before the stocks did. Do you have any indication of what next year could look like for the stocks if we do just get a flat or slightly upward market as you had predicted earlier in the interview?
Oh, great question. First of all, in a bull market, the equities do lead the metals. Also, the ratio is about 3-to-1, or the beta if you're in the stocks. The beta on the equities is much greater than it is on the metal. The metal's got a high beta, but that just means volatility, basically. So I would, if I was asked what is the best value, is it gold, is it silver, or is it the underlying equities? The answer is undeniably the underlying equities. But you got to be careful. I mean, what we've taught at the Morgan Report for years is, big money in the big companies, mid money in the mid companies, and speculations are just that. Money you can afford to lose. So if you adhere to what we teach, and this is all outlined in How to Use the Morgan Report, it gives a sample of, I'm going to invest in the metals for the first time. How much should I put in the physical? How much should I put in the equities? In the equity side, how much should I put in the top tier, the mid tier, and the speculations? We go through that whole thing for everybody. It's something that, I wish I could force people to read because, we get questions. But anyway, back on point. The equities are totally undervalued. It's where you're going to make the most money. Certainly they can go up without the underlying metals going up. For example, this speculation against speculation that I like so well, that I am invested in at a cursory level, meaning a amount I can afford to lose, where you can get, the morganreport.com/new report. That situation, it could go by itself if gold was flat or even got lower than it is now. Why? Because first of all, in this gravity feed system, they can mine gold at about $400 an ounce. So what's the margin if you can mine it at $400 an ounce? Well, if it's at 1,000, that's a $600 margin. That's pretty high. Is this thing significant for Barrick? Is it significant for Newmont? Is it significant for Anglo-American? No, but for a small miner, it's very significant. So yes, the equities can go in and of themselves if there is some stabilization and upward pressure on the gold and silver prices. Then the equities will advance substantially. I don't have the numbers in front of me, but I just viewed them yesterday and my memory's good. But basically that 3-to-1 ratio is holds. In other words, Colin, I was just looking at, what all the metals across the board did in 2015, waiting for the next report so I can announce them on my update. But gold was off, I think, 10%, and the HUI was off 30%. That type of thing. And it goes on the upside as well. So if gold goes up 10%, you can expect that the HUI would go up about 30%. It takes a lot of ability to go against your instincts to buy these type of equities at this point in time. It's really the way the big money is made. It's the way that most people psychologically have a hard time to do. It's I think one of my contemporaries has said, hold your nose and buy anyway. It's that type of thing. But I would suggest buy quality. Why buy a fixer-upper in the real estate market when it's very, very cheap, but you've got to put money into it to get, be able to sell it, when you can buy a house in another neighborhood that is absolutely pristine. There isn't a blade of grass out of place at a very big discount. It's much easier to move it. It's the best of the best. And that's what I would strive for people to do. I know I'm kind of contradicting myself on this special report. That is a special situation. So that's something I would put outside of what I'm speaking of now. But generally, you want the best of the best. So strive to get really solid portfolio performance going into 2016. And as those things perform, you can sell them, you can write covered calls. There's lots of ways to invest. And you really need to kind of discover your own abilities and your own methodology to invest. I mean, a lot of people like to buy and hold, and that's what they're taught. Some people are more aggressive. They like to trade part, which is what I do. Other people like to find stocks that they can use for income, which would be dividend paying stocks that also have the ability to write calls on, for an example. So there's lots of ways to make money in a market. You just have to be aware of them and comfortable with them. And of course, for example, the income side on covered calls, that's something that you need to be taught or learn from somebody. It's really not that difficult, but you would be outside of your comfort zone doing it the first couple of times, because basically what you're saying is, I want to rent my stock for the next 3 months for this price. And by the way, if it gets such and such a price, I've already committed in advance that you get to buy my stock at that price. But in the meantime, you got to rent it. So it's actually a conservative type of investment. I used to do it more than I do now. I didn't mean to go down that rabbit hole too far, Colin. I know your background and your dad's background, so I know you're following all this. I probably took the listener way off track, but the idea being that you want to start with the best and work your way down.
Well, yeah, I think what you're getting at is that in a sector that's historically quite speculative in a normal market, there's really something for everybody right now. You look at something like Nevsun Resources, and just talking round numbers, but they have about $500 million in cash and a $500 million market cap, paying 6.5% dividend. Or Abitibi Royalties, we talked to a couple weeks ago on Palisade Radio. They have as much cash as market cap, and they're selling covered calls on their large positions of Yamano and Anglo Gold. And then if you want something more speculative, there's plenty of those out there right now, but across the board, they're all cheap. So, it's a market for everybody to look at right now. And David, I want to ask you if you have anything else to add for our listeners, or something you're looking forward to in the new year with the gold and silver sectors going ahead.
Well, first, I want to wish everyone listening, Merry Christmas, if that's your situation. I'm not trying to be too politically correct. Obviously, I know a lot in the Jewish community, so happy Hanukkah to them. And, I'm pretty honoring of other people, places, and things. So let me just say happy holidays for the rest. I want to thank you for what you talked about, backing up on the covered call writing. I also want to interject one more thing about this gravity feed gold situation, and that's for any of your listeners that are in a junior that they really believe in, and that they know that it has, good grade gold, like let's say 3 grams or so, or maybe higher, and let's say a tailing situation, or on the project that's easily accessible. They owe it themselves not only to get this free report, but more importantly to pass it on to their management, because this is brand new. Not many people are aware of it. I want to make it available to your listeners because, again, a game changer in quotation marks potential for the small miner, because they can go into a situation where they do have gravity feed gold and basically self-finance, because the way this company is set up is they strike a deal in each individual case. So it's not always a set, 50-50 type of a situation, although that's just a way to think about it. And they get, the company's getting, a profit from their gold with very little dilution, basically none. So they can take those funds and utilize them to, restore the treasury, pay off debt, pay their employees. I'm trying to not be too funny, although in some cases that's the case. Back to what you said, to reassert, there are some in our community that are very negative, the miners. First of all, you can't get physical without having a mining company. So let's establish that, very obvious common sense fact first. On top of that, there are many companies that are very cash rich, have very, very strong treasuries, have very good positions right now to buy up assets in the ground, 10 cents on the dollar kind of thing. So don't give up on this sector. I think a balanced view is always the best view. If you swing too far one way or the other, you're liable to overlook too many things. Certainly, I like them both. I've always taught to own physical first, but the equities have the best values. So earlier in the show, I have nothing more to add other than, remember what this season's all about, regardless of your persuasion. It's really about what it means to be human, and giving is better than receiving. I truly believe that. I didn't when I was very young. I do now. And just think what you can do out there in the everyday life. It doesn't have to be a material gift. Maybe it's just being present in front of that person that you're getting that latte from. Or maybe it's that person at the grocery store that's checking you out that's having a bad day, and just give them a smile. Those small things, although they sound small, really mean something, because we all encounter that in each and every day of our life. And if there's something about you can actually give out free, a smile, a nice comment that's sincere, that type of thing, I think we lose sight of that. I think we've just gone too far, especially, these financial, I want to say shows, Colin, because I know the type of man you are, but I think we need to remind ourselves, and this season remind us all of that. So I just want to remind everyone that I am reminded that that's what this is all about. It's not about, necessarily how we can increase our financial worth, although that's part of my business. It also has to do with how we can increase our human worth. So I'll end with that.
Well, thank you for that, David. I agree. And I want to say Merry Christmas and Happy Hanukkah from Palisade Radio to all of our listeners. It's been a huge year for us, and thank you for all the support. On the point of giving, I just want to remind everybody to go to themorganreport.com/new report. David will instantly send you the report on this company that he's been teasing you on, and also you have the chance to win a copy of the Silver Manifesto, which is a great book by David. So I urge everybody to participate. And thank you so much one more time, David, for coming back on the program.
Truly my pleasure. Thank you.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?